Good morning, everyone. It is February the 11th, 2016, and we have the potential for a great deal of volatility today, more than we've had the last couple of days, if you can believe that. And the dynamic we're dealing with is flight to quality. Crude oil crashed overnight. It's in the 26s. Remember, we said next stop after 27.50 would be stops below 25 bucks. We're well on our way to that. Gold is up, treasuries are up, the dollar is down, equities around the globe are selling. China's still on vacation. Hong Kong came back from vacation today and immediately sold their markets and bought gold. So central banks are going to be asked to prop up the banking system, which will be stressed, especially outside of the United States, on commodity prices triggering loan calls. The loans are too big for the banks to foreclose, plus they wouldn't know how to run the companies anyway. So there's going to be a lot of restructuring going on. Central banks, the IMF, the World Bank will be called upon to do more. The governments of Nigeria, Ecuador, Venezuela, Azerbaijan have asked for relief on their crude debts, and they've asked for loans so they can continue their social programs to minimize social unrest. So all of this jiggering, fiddling, screwing with the economies by government bureaucrats around the globe have brought us to this point, and we have a chance to trade it and prosper. Most of the world doesn't. So we're at a situation right now where if the selling continues in the E-mini, I imagine treasuries will hold their own, gold will hold its own. We'll get some short covering as people come into the market. Right now you can see that before the day session opens, we're still trading higher in treasuries. So we're at resistance, 29.5 to 133 even. We get through that. Just market numbers 04, 08, 12, 16, etc. is how we'll trade. So we've just made a new high right here. Now, when the overnight session gives us this kind of range, we look for highs X in W periods. Quite often they can be the XS. And again, the key is going to be the stock market. The news today is minimal. The news overnight was minimal outside the crude markets. Jobless claims 281. Bloomberg Comfort Index, who knows. And natural gas inventories minus 82. So focus, ES, crude oil, Yellen's testimony. Again at 10. She's probably said all that she's going to say. She might be questioned about what's going on in the markets overnight. Don't know. And then plunge protection team. Now the usual way the plunge protection team operates back in the Greenspan days was they let the bottom fall out of the market, and when that first wave of selling was over, they bought options. They would just come in and use the leverage of options where they wouldn't have to put the full amount of money up. They knew exactly what they were spending. And if they're buying call options, that means that those that sell those options, those calls to the Fed, had to buy futures to button up that position. Now what we've seen is that the selling starts and the 50 lot player buys every down tick. You can just see them. And so the market is going down. The 50 lot pane number 3 on our F4 screen is going up, and that's how the Fed has buffered it. So we'll get a chance to see how that plays today. We'll get some more knowledge. So right now, failure to take out the overnight session high with some help from the E-mini is what's going to trigger the sell. So resistance is 31 to 03, and then 7 to 11. On the buy side, we've got volume at 22.5. We're at 29. So 17 to 21. Buy 1. And the breakout came at 14, so we'll make, I just got to give it some room around this volume number down here, 5 to 9. The danger's in being long. If the E-mini starts to move. So now, as a small retail trader, how do you handle this if you can't cut your order size? If you're a one-lot trader, let the explosive moves get out of the way. Don't take advantage of that volatility that's early in the session. Trade development once it sets in. That way you can gain the experience of seeing what happens on a day like this and not put your account in jeopardy. It takes capital to trade. It takes experience to handle high volatility situations, and it's really just, it's a game of keeping losses very, very small, commensurate with the increased volatility. Your stops will have to be wider. And if trade doesn't work quickly, you get the hell out and you start all over again. So, looking at this contract, we're going to sell failure to take out 24. Actually, sell failure to take out 24 to the buck. And then we're going to make 7 to 11. Sell to, and I mean, we've just got tremendous range. We closed this market yesterday at 167.01. We're almost 4 points above that right now. On the buy side, we've got volume at 12. We've got 170.03. I mean, let's 5 to 9, buy one. Trying to pick up this high volume area right here, get inside that, so we've got a little wiggle room. And then the breakout from Q is from 17, so we'll make 21.25, buy 2. I mean, your guess is as good as mine. Okay, gold, 11.25. Haven't seen these prices in quite a bit. And looking at, we're up 37.38. So over the last year, the high price was 12.70. You can see that volume starts to fall off pretty quickly. Above 12.45, and the low volume numbers say 12.57, 12.58, then 12.70. So we've gotten stops above this high right here, and 12.50 is an obvious number. So we're going to sell failure to take out 12.50, and we really aren't interested in the short side of the market if crude continues to sell. And the E-mini continues to sell. It's just it's like it was last night. We just, in gold and treasuries, if the E-mini is selling, we're not playing the short side. Pretty simple. So resistance is at 43. Sell 1 is 40. Let's just make it 40 to 42, and that's with a big question mark and caveat, and then 12.50 plus or minus. And right now, if you wanted to limit sell, 12.49.50. On the buy side, where do you put your orders? We've got a breakout from 12.20. We've got a breakout from 12.30. The last rotate down is 12.34. So 33.35 buy 1. 25.27 buy 2. I wouldn't even count these as swags. The 40 to 42 is pretty aggressive. We need some help to pull that trade off. 12.50 plus or minus. Stop. That's a play for stops above 12.50. It is a very, very round number. If you had to have a resting limit order, that's where I would put it. The thing that people forget about futures markets is if the expectation is for $20 crude, it doesn't screw around. It doesn't take a year and a half to get there. It moves. And you have to wonder what they're thinking in Russia and Saudi Arabia and places like this. They think they can outlast this, or they can go out and they can borrow money based on I mean, who in the hell would lend money to Russia? I mean, that's almost a guaranteed loss when times get tough. Who would finance and build themselves properties in Russia? That's almost a guarantee to get it selling it. And when you go to the Middle East, it's much harder to get a loan with crude oil at 20, 25 bucks a barrel, no matter how much your reserves are in the ground. When they look at your budget and the condition of your country, the population, how the government has to spend, in Saudi Arabia's case, to keep a lid on their population that is definitely underemployed. Okay, 1375, then 114 even. So self-failure to take out on the euro. 1375. Oh, that's our first sell point, and then 1400 would be sell 2. On the buy side, 1325, and then 1300. Well, Jeff's got the inside line on what's going on with Saudi Arabia and their play. Interesting supposition, Jeff. Seeing how Saudi Arabia has always acted in their own self-interest, and we've really needed their help before. We haven't gotten it on oil pricing, and that's consistent back to the 70s. And we've saved their rear ends more times than you can count. So it'll be interesting to see if it actually does play out. Okay, crude's headed for stops below 25 bucks. And then if that comes out, 20, and we're just making new lows right here. And here's where we sit. So 26.25. We're at 58. Maybe a little lower this morning. So 26 even, 26.25. People dump when they come in. And then 25, 50, 25, 25. Okay, we have the London high at 27.06. We're at 63. So 75 to 26 is sell 1. It is aggressive. And then 27, 25, 27, 50. And again, in markets like this, you just keep your losses small, play the game. And see what happens. Trades will happen quickly. You can probe, you can get stopped out, but if you catch one of these trades, I mean, it pays you back in spades. Okay, the E-mini stops below 1800, I think, is the play. So maybe we've rejected prices below 1808. We've gotten stops below 1805, the previous low. And we can see right here, sellers into 20. Got this low at 22, 23. We've got that low at 25. We got The last rotate up in London was 27. We've got the spill from London. It was at 21. So a little extra volatility, maybe a 19 to 24 sell. And then we've got the spill from 32. And so a 29 to 34 for sell 2. On the buy side, 1800 even, 1805, buy 1. Don't really like that trade. Then 85.90, buy 2. But somebody's going to cover shorts against 1800. So if you wanted a resting limit buy, 1800.50 should get us a little bounce. And the key to this market is going to be if and when the plunge protection team enters the market. And this, the Fed interference in the market has been pretty tame compared to what Greenspan used to do. Greenspan used to just blow the top out of the markets when he would just come in purposely, and he would come out in private speeches and stuff saying that he wanted to destroy the trading community, who he blamed for exacerbating the economic the markets and turning and roiling them. So that's where we are. Big market potential today. It's going to take a while to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.